We are now talking the risks of mining in developing jurisdictions, and can the rewards outweigh the risks involved? Joining me today is Neil Pereira. He's the Principal Investment Officer over at International Finance Corporation. He's also a speaker here at Mines and Money, New York City. Neil, good to have you on the show. Welcome to the program. So let's start with your overview of the global metals landscape right now. When it comes to precious metals, where are we with for example, supply-demand fundamentals? How do you see it?
So I think in the last year we saw gold prices fall, but in the last quarter of this year we've seen a big increase, and I think that's partly driven by expectations of reduced long-term interest rates. There are other reasons as well. We've seen investors going back into the ETFs. We've seen central banks in China, Russia, Turkey, and India as well, all increasing their purchases. So I think over the course of the next year, we'd expect to see gold continue to rise. And in terms of supply-demand, I think the market's in balance and has been for a while, but I would expect we're going to see corresponding increases in supply in the longer term.
You know, the IFC is involved with emerging markets transactions. So we've seen miners operate in developing jurisdictions like West Africa and Latin America, but how much value are these operations adding to the local communities, both in terms of job opportunities and stimulating the economy?
Yeah. So it's something we're very focused on. We are a development institution. That's our primary objective. We just recently closed the Sangaredi GAC project in Guinea. In West Africa. This was a $750 million financing, part of a $1.5 billion project. The project alone is expected to contribute something like 3 to 4% of GDP. The employment is about 750 people. But if you look at a factor of 20, which is typical in developing countries, that's probably going to affect 14,000 people in terms of jobs and opportunities and wealth creation. In addition to that, you've got things like local purchases and exports and associated infrastructure, because the mine includes a rail line as well. So big impact, and that's the kind of projects that we look for.
A lot of these jurisdictions, as we know, however, can be politically unstable, dangerous. How can miners better navigate these hurdles, tremendous hurdles at times?
I think twofold. First, in terms of the regulatory regime, is ensuring that your contract is fair. Complying with the mining code. Ideally, it's best to be within the mining code. When you have specifically negotiated contracts, that's where things can get problematic with governments wanting to renegotiate. So, to the extent possible, fitting in with and conforming to the existing mining code. That's one. I think the other thing is really ensuring that social license to operate. Communities are much more aware now than they were 10, 20 years ago, and their demands are much more. They want projects to happen, but they also want to directly benefit from these projects. And they're very vocal about it. So it's ensuring that you have that social license to operate by, for example, hiring locally, purchasing locally, providing training so that people can learn the skills to do the jobs. And you know, protection of the environment as well.
How long does it take to start seeing an impact a mine can bring to a community? How many years out?
Depends on the commodity, depends on the country, depends on the scale of the project, but I would think immediately. You know, I mentioned the factor of 20. When you create direct employment, typically one person in a low-income country is supporting many others. So if you're hiring 750 people in direct jobs, that's a great number of people that will benefit immediately in terms of good jobs, income generation. So that is an immediate effect. Then there's a construction period, and eventually the country is going to benefit from exports, which again goes into the GDP. And then there's things like local supply. So it really depends on the scale of the project, but I think there are some impacts that are more immediate than others. But over the course of time, projects really do contribute to the economy.
Neil Pereira from IFC, thank you so much for joining us today.
Thank you for the opportunity.
Thank you, and thank you for watching. We'll have more for you on Kitco.com.